Greetings, members, one and all of the Salivation Nation. Gold shines even brighter after the Federal Reserve's newest policy statement. Let's explore. Yes, it wasn't by a whole lot, but gold has just extended its gains for a third straight day after the Fed policy statement. In some ways, it kind of surprises me because I think none of this really was a surprise. But nonetheless, now that it is actually official, gold is climbing a bit more. Gold futures climbed on Wednesday for a third straight session, then moved even higher after the Federal Reserve said it intends to keep key interest rates near zero through 2023, which is likely to prove bullish for long-term metals investors. That's right. So very exciting indeed in this article from MarketWatch. And if you like gold, well, thumb up this video. Why not? That's if and only if you like gold. All right. The U.S. Central Bank signaled its plans to keep a key U.S. short-term interest rate near zero at least through the end of 2023 to help the economy recover from the coronavirus. The Fed's forecast for 2023, released for the first time, also show the rate staying near zero from now until at least 2024. The Fed confirmed that it's not even thinking about contemplating or thinking about raising rates, with its projections of zero interest rates for at least the next 4 years, said Brian London, editor of Gold Newsletter. Moreover, it's made its goal of higher than 2% inflation official by including it in a post-meeting policy statement. So yeah, all those are bullish for gold, which means that gold is going to shine through these next couple of years here. But you know what? No bank around the world, central bank, is going to probably be raising interest rates. Everybody's kind of in the same boat here through as we work our way through the coronavirus. But there are some positive signs in the economy. The stock market's up. Housing has recovered essentially. But, you know, those are things that can easily go back the other way. And we have this looming debt. We have a lot of things that are kind of working against us economically as well. And so that's not going to very much bode well. There's a lot of uncertainty out there. And I think that's why gold is reacting the way it is. And what could happen to spending, and to if there's another wave of the coronavirus vaccine effectiveness and the like, how many people will actually take it? Some are predicting that 2/3 of Americans will take it once it's fully implemented. Well, that may not be enough to stop the spread. Who knows? We'll see. That all adds up to official recognition that real inflation-adjusted interest rates above zero are not only undesirable, but impossible given the size of the federal debt and its growth trajectory. He told MarketWatch, this amounts to an extremely favorable backdrop for gold for years to come. Shortly after the Fed decision, December gold was at $1,974.10 an ounce in electronic trading. It had settled with a gain of $4.30 or 0.2% at $1,970.50 an ounce, with most active contract prices again ending at their highest September 1st, according to FactSet data. The FOMC announcement giving off an even more dovish signal is going to help gold break out of this consolidation phase it has been in for the past several weeks, Peter Spina, president and chief executive officer at goldseek.com, told MarketWatch. It may take some weeks still, with some price consolidation finishing up here, but I expect gold to break back above $2,000 in the fourth quarter and set up fresh record highs as we close out the year. So, a very bullish statement there. We saw this consolidation pullback, and we're kind of getting to the point now where we're used to these prices. And so we could see now that anything below $2,000 is considered a steal for gold. And boy, I tell you what, it wasn't that long ago when, $1,500, $1,600 was like, oh, that was painful to see it go up over $1,600. Boy, amazing how times have changed. Prices for gold initially fell, then moved up during Wednesday's regular session in the wake of U.S. retail sales data, which revealed a rise of 0.6% in August for a third month in a row. But momentum appears to be waning after a burst of demand earlier in the summer once the country opened for business. We're not totally open for business. There are some states that are still closed in many ways, restaurants not at peak capacity and the like. Overall, gold has flatlined since early August peak because of the other trends driving it higher have come off the boil, said Adrian Ash, director of research at Bullion Vault, pointing out that the prices are currently right in the middle of the last 4 weeks' range. Bond yields after inflation are holding around negative 1% on the 10-year, and the dollar has steadied from its drop, so exchange-traded fund inflows have dried up from investors wanting to protect their capital with gold. As things start at these levels, those three factors are supportive for gold, but it's the direction of travel that really matters, he told MarketWatch. Another drop in the dollar plus new lows in real rates will very likely spur bullion ETF demand, which should help gold break out of its holding pattern. Silver was down negative 0.4%, rose a penny to end the day at $27.47 an ounce, following a 0.4% climb in the previous session. Previously, the industrial part of silver was headwind, but now China has seen improved retail sales and a global reopening of the economy, and return of industrial demand are a game changer with euro. So there it is. And ending this article here after looking at platinum and palladium prices, which also fell, we suspect that positive economic psychology, higher global equities, or positive Chinese economic data will be required daily for palladium prices to continue to rise and regain the $2,500 level. Let's take a look at where prices are. We can see here that gold is up $4.50 here. It's the only metal that is risen today. Silver's back barely a little bit here with a 2-cent drop there, down 0.07%. Platinum is at down $2. Palladium is down $4, and rhodium took a hit today. Took the biggest hit, down $300, but still comfortably above $1,300 in the ask price. Where does that leave the silver to gold ratio? Well, up a little bit, 72.21. So there it is. And so yes, indeed. So gold is shining from the Federal Reserve's actions. It's going to be a couple of years of near zero interest rates here in the United States of America, and that's going to make gold shine indeed. So post your thoughts below. Would like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.